Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Time for another technical checkup on the health of this stock market rally with our tactical trader Kevin Cook, who is in the old video ranch once again with more charts.
Yep, I'm trying to do 5 index charts in 3 minutes.
All right.
So let's get rolling. Let's take a look at the S&P 500 first. We ran up to resistance 1470 last week. Of course, the market stalled there, and it's been weak since, and the chart looks kind of sickly too. It looks like it's rolling over. So this is where we're at. We haven't made a trip down to the 50-day moving average. I think that's a fair target, unless the bulls decide to take this higher before the election. It looks like the path of least resistance is lower right now, but I'm still a buyer on the dips. Next, let's look at the bullish percent index. This is S&P 500 stocks, the percentage of them that are on point and figure buy signals. Now, I don't use point and figure charts, the charts with the X's and O's on individual stocks, but I think looking at the S&P 500, each individual stock, whether it's on a buy or sell signal, in aggregate is useful. So we're still in a good spot here at nearly 77% of S&P 500 stocks on a point and figure buy signal. And I'm showing a 3-year chart here so you can get a flavor of what happened during the corrections in 2010 and 2011. And this thing, as I've pointed out for months now, we want it to be in this sweet spot between 60 and 90. And if it can just stay there and hum along, we're doing fine. So this is still positive.
Okay.
All right, Russell 2000, weaker than the S&P 500, and still money managers favor the big cap safety and yield stocks. So we actually had a pretty decent trade here in the past week. We've been long TNA, which is a 3 times bullish, but we also put on a hedge of long TZA, which is the 3 times bearish for the Russell 2000, and we took that off yesterday. It was kind of a weird day yesterday. Energy was the only sector that was up. And I'll show you the ERX. We took profits on our energy trade, 5% profits there, and we took 5% profits on our bearish trade at the same time. So when you can do that in a given day, that's pretty nice.
Yesterday being the 9th of October,
yes,
right?
Today's the 10th, yeah. Russell 2000 coming up on its 50-day moving average at 825. So it's probably gonna go through there, follow the S&P lower. But again, I'm looking to buy 810, 820 on the Russell 2000. All right, here's the ERX I talked about. This is the Direxion 3 times energy bull. It's based on the XLE. So what happened yesterday, October 9th, was more Middle East tension. Spikes oil up, sends Chevron and Exxon up. Chevron and Exxon together are over 30% of the XLE market cap. So that's why ERX had a good day. And we've just been trading it between 52 and 55 for both tactical trader and market timer, and taking little chunks out of it. I want to have a core bullish position because I think ERX is going to go back up to 60, but we're not afraid to take the 5% swings that it hands us once in a while. All right, lastly, this is from Marty Chenard of stocktiming.com. I didn't have room to put his name on here, but I want to give him full credit for that. This guy, I've shown you his charts before. He has like 38 different technical indicators that he provides every day to his subscribers, and he shows a free one every day. This was the free one yesterday. This is his accumulation distribution by institutional investors, and he's showing that for the past 3 weeks, since mid-September, that institutional investors have been in a distribution mode. And will this continue? Obviously, that's been some of the pressure, but it's been a slow sort of stealth sell-off here. And I expect it to reverse at some point, but that's what's been going on. Again, this is Marty Chenard, stocktiming.com.
Bottom line, rally still healthy?
Rally is still healthy, but this weakness, it's going to continue, and you want to look for buying opportunities. Another 3 to 5% lower.
Okay, if you want to study these charts a little more closely and in a little more detail, you can always go to our website, Zacks.com, and see this video piece if you're not there already watching it. And you'll want to keep up with Kevin's other articles in the Cook's Kitchen column space as well. With Kevin Cook, I'm Terry Ruffalo.